Ladies and gentlemen, good day and welcome to GMR Infrastructure Limited's conference call to discuss Q1 FY23 results. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today Mr. Saurabh Chawla, Executive Director, Finance and Strategy. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Also, recording or transcribing of this call without prior permission of the management is strictly prohibited. I now hand the conference over to Mr. Saurabh Chawla for opening remarks. Thank you, and over to you, sir.
Thank you, and good afternoon, ladies and gentlemen. I also have my other colleagues on the call, GRK Garu, who is the Sector CFO of the airport business. Now, of course, it's become a pure airport vertical, but he handles the minuter details of the airport business. I also have Ashish Jain, who is the IR head, and Navneet Singh, who heads our strategic finance, who's joined us recently. Rajesh Arora is also there, and on the call from Mumbai we have Suresh Pagodia, who's the CFO of operations, and Ashish Jain, who heads strategy. So all my colleagues are here to answer any of your queries. So first, thank you for joining our first quarter fiscal 2023 earnings call. As you can see, various countries are facing lots of challenges emanating from high inflation, commodity price shocks, diminishing value of currencies, and of course monetary tightening that's happening world over. However, India of course remains an outlier, a bright spot in this current global scenario. Most economic activity indicators in India remain robust, despite the global headwinds and despite the monetary tightening at home. For instance, services PMI has now grown to 59.8 in June. IIP growth rate for May 22 is at about 19.6%. Manufacturing PMI is holding steady between 53 to 55 since January of 22. Coming to our performance of GMR Airports for Q1 fiscal year 23, GMR Infra's net revenue increased by 24% year-on-year to 1,030 odd crores, while EBITDA increased by about 21% year-on-year to about 428 crores in Q1 fiscal year 23, mainly driven by traffic improvements in our operational airports. Thereby, the net loss after tax has also reduced from about 180 odd crores in Q1 fiscal year 22 to about 113 crores in Q1 of the current fiscal year. Here I would like to highlight a few key points in our business. We made significant progress in our CapEx programs of Delhi, Hyderabad and Goa. Delhi has achieved about 68%, Hyderabad about 75%, and Goa Airport has achieved about 85% completion as of June 30th, 22. As you are aware, Goa Airport is targeted to be inaugurated in August 22, while Delhi and Hyderabad are targeted for completion in September of 23 and December of 22 respectively. In Goa, we have already filed the multi-year tariff proposal for the first control period starting from 1st April 23 to 31st March 28, with inclusion of partial period of 1st September 22 to 31st March 23. In Crete Airport, about 13.2% financial progress has been achieved, with completion of 90% of earthworks in the airport area and 32% earthworks in external access roads as of June 30th. We are on track to achieve the completion target as stipulated. On the Medan Airport, the Angkasa Pura Aviasi APA, the joint venture company of GMR Airports and Indonesian state-owned airport operator, which is Angkasa Pura II or AP2 as it's more popularly known, formally took over the operations of Medan Airport beginning July. On the passenger traffic, Delhi Airport and Hyderabad Airport have exhibited continued recovery of international traffic, which is currently standing at about 79% and 87% of pre-COVID levels respectively as of July 17, 2022. As post removal of restrictions on scheduled flights, various international carriers have resumed their operations and added capacity to various Indian destinations. Domestic traffic at Delhi Airport and Hyderabad Airport have recently been impacted by seasonality and also to a certain extent by high airfares, which have resulted in traffic being at about 88 to 87% respectively to the pre-COVID levels. However, the long-term growth story remains intact. In our Medan Airport, traffic recovery is encouraging as domestic traffic recovered up to 94% of pre-COVID levels and international traffic recovering steeply. Overall, traffic recovery is above 80% in Medan Airport. In our international airport, Cebu, continues to be in a recovery phase. Its domestic daily pax is now nearing 60% of the pre-COVID level, while international traffic is still lagging behind at 10% of quarter one, and that's mainly because the international traffic into Cebu is mostly from East Asia, which is primarily China, Korea, and Japan. In our Delhi Airport, as an interim arrangement, we and Airport Authority have entered into a settlement agreement on the payment of monthly annual fee with effect from April 22 prospectively. So the results that you see is after the payment of the monthly annual fee for the last 3 odd months during the quarter. In Delhi Airport, we have successfully completed the issuance of 5-year non-convertible debenture amounting to about 1,000 odd crores. The proceeds will be utilized partly to finance the Phase 3 expansion plan. In our Hyderabad Airport, we have received a letter of confirmation from Ministry of Civil Aviation extending the term of concession agreement for a further period of 30 years, that is from March 2038 to March 2068. On airport land development in Hyderabad Airport, lease agreement has been executed with Schneider Electric for a lease of build-to-suit facility of about 0.38 million square feet in 2 phases on 18 acres of land. In Delhi Airport, we have recently, or yesterday actually, awarded the contract to the Chalet Hotels, the owner, developer, and asset manager of hotels, for developing a hotel at Terminal 3. The Terminal Hotel will be about 350 to 400 rooms and positioned in the 5-star deluxe space. The development of Terminal Hotel at T3 will bring hospitality to travelers at the gates of international terminal. It will provide significant benefit to transit passengers, both domestic and international. In Nagpur Airport, the Supreme Court of India has upheld the judgment of Nagpur bench of Bombay High Court that had previously quashed and set aside the letter issued by Mihan India Limited, annulling the bidding process for Nagpur Airport. Accordingly, the authorities are expected to execute the concession agreement at the earliest at Nagpur Airport with GMR. Going forward, traffic recovery will be mainly driven by lifting of curbs in airline capacity, addition of routes, and capacity opening up with the opening up of East Asia, especially China and Japan. As per industry experts, airline fleet is expected to go up by 2.5x over the next 5 to 7 years. New airlines such as Akasa is now getting ready to launch its operations in India, and Jet Airways is not far behind relaunching under a new owner. I believe that Akasa's first flight is expected in next week or 10 days time. Existing airlines are also adding capacity and flying to new destinations. On the ESG front, sustainability has always remained a key element of GMR's corporate ethos and strategy. GMR-led airports across the nations are making consistent efforts to maintain the ecological and support sustainable development. Our Our endeavor is to ensure operations are carbon neutral, and accordingly, we constantly monitor our activities carefully to further reduce emissions. A major milestone was achieved during this fiscal year, where Delhi Airport now has started to operate with 100% of its energy requirements being met from renewable sources. The presentation with all financial numbers are already available with you. If not, it can be downloaded from our IR section on our website. We are available to respond to your questions on this call and offline post the call. Now, I would like to open the forum where my colleagues from the corporate and businesses can answer your questions. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Abhiram Iyer from Deutsche Bank. Please go ahead.
Hello, sir. Hope you can hear me well. Congratulations on a strong set of numbers in a challenging quarter. My first question was on capex expenditure over the next 3 quarters of the fiscal as well as into the next fiscal. Could you just give out individually what those would be for Delhi Airport and GMR Hyderabad Airport? And with and without, any proceeds from the lease facility as well.
In case of the Delhi Airport, this current financial year, we have expected to spend about 3,300 crores. But we have already spent about 600 crores so far. And in case of the Hyderabad, we will be spending about 2,000 crores this financial year. With that, entire expansion will be completed.
The 2,000 crores will be till December 23. That's a targeted date for Hyderabad, right?
Yeah, December 22 is the target for Hyderabad Airport. But maybe it may take 1 or 2 months more. But by March 2023, everything will be done.
Got it, sir. And this 3,300 that you mentioned for Delhi, this is before we take into account any proceeds from the lease facility?
Some amount of lease facility also will be used in that. But as of today, will be about 500-600 crores of lease facility we expect to use.
Got it, sir. And the second question was on the tribunal case with regards to the Delhi airport. If I may, what's the current status, sir? When is the next hearing? And just one quick question. I know we have said that it's around 1,300 crores of payment that needs to be that we have sort of mentioned, and we have protested around 400 crores of payments already made. May I know what the opposite party AAI is claiming or is bringing to the tribunal?
No, always our stand was that as per the concession agreement and the loan law, we are entitled in case of the force measure, we are entitled to excuse from the performance of our obligations. So that has already been, at the Delhi High Court level, since they have agreed upon, they've found the merit in our argument, they have given us stay on payment of the annual fee. So for the 2021 and 21-22 together, we have not paid is about 13 billion INR. It's about 1,300 crores. However, from 1st April 2022 onwards, we have started making the payment of annual fee. It is only the issue is now pending only for 2 years, 1,300 crores. The arbitrate tribunal, all the documentation, everything has been completed, everything has been filed before them. The dates have already been provided by the tribunal. In the month of October, they will be doing the cross-examination of the main witnesses. And then after that, arguments and the judgment is expected to be by end of December. This is the estimation.
Got it, sir. And the 1,300 crore, this is the disputed amount at most, right, sir? I know obviously if it goes in our favor, then this will, and we do have the right of force majeure, so this will maybe waived. But is this the actual amount that is claimed by AAI, or are they putting any penalties or additional interest or any other charges?
No, in case of the post measure, as it is, the interest and penalties are not applicable.
Okay.
Number one. Number two, the company has not been paying it because of the High Court stay, so that is the second ground. So far, AI has not put any claim. They were only asking for the MAF payment as of today.
Got it, sir. Thank you very much.
Thank you. Ladies and gentlemen, you may please press star and 1 to ask a question. We have our next question from the line of Mohit Kumar from DM Capital. Please go ahead.
Yeah, good afternoon, sir, and good to see good recovery in the airport traffic. So my first question is, so by end of this quarter and next year, we can see the Goa and the Hyderabad airport new expansion adding to our revenue. Is the right assumption?
Correct. That is the right assumption. By next year, they will add to our revenues. Goa and Hyderabad will consolidate on a consolidated basis. Yes.
Understood, sir. Secondly, what is your outlook on airport land monetization, especially for Delhi Airport? And where are we in terms of land identification of 2.16 million square feet at Delhi Airport for the two developers?
2.78 million has already been taken over by the existing winner of the bidder, and he has already, that's called Bharti. They have already paid the money in the last year, September. The next 2.12 million, 1.3 million, they are going to take over by March 2023, and we are expecting the payment by April 2023.
The land has been identified. Can you expect, so you don't expect any hurdle, right? By an identification?
No, land is already identified. It is already available in case of the hospitality districts next to it. There are two land parcels have already been identified, and the infrastructure needs to be being developed. So there should not be any challenge.
As a matter of fact, the work has already begun on that. On the 2.78, it is already with Bharti, and they began the work also on it. So it's not that something which is speculative in any nature.
And what is the outlook for the rest of the, let's say, 24 months for further monetization?
At this stage, we are not looking at any further monetization beyond what has already been contracted. So in the last bid, it was a bid which was 5 plus 5. And as you know, in real estate, absorption levels have to be taken care of before further monetizations. We are not contemplating any monetization of further lands beyond this 5.5 in the near future. Subsequent to that, we will see what happens. But even in that, now mostly our strategy is going to veer towards our self-development rather than monetization of land.
And the right of the RP for the next 5 million is still available to them.
Mm-hmm. And so lastly, is there any cash losses expected in FY23, and how do you intend to fund it? Does it mean that corporate loan will inch up in the fiscal?
Which one?
Which one you are referring to? Sorry.
No, my question is there any cash losses expected in FY23? And if yes, how do you intend to fund it? And does it mean that corporate loan, which is 19 billion at this point of time, will inch up by the end of the fiscal?
Just 1 second, Mohit.
Yes.
Yeah, so the cash losses which are there are very minute as of now, as far as Q1 is concerned, and I think by the end of this fiscal year, this will also get mitigated. There's enough liquidity available within the group to manage any of these liquidity mismatches that may be there from a losses perspective.
Mm-hmm. So if I have some more questions, is there any update in terms of specific policy enablers you are looking which will improve our non-aero revenues in the medium term?
Not clear.
Your voice is not clear at all.
No,
Can you
my
come
my
closer
my
to
question
the-
is my question is there any specific policy enablers which you are looking at which can improve our non-aero revenues, especially on the duty-free side?
No, we are not looking for any specific policy initiatives. Businesses on the non-aero side are quite robust. And in our strategic plan over the next few years, we want to consolidate the non-aero businesses in various entities and manage at the holdco level. That is the way we are going to proceed forward, because as we keep adding number of airports in our family, we believe that if we can create consumer businesses out of that, then we can change the nature of our business just from merely an infrastructure company to a more of a consumer-driven company. That's a strategy that we will articulate. We have articulated in the past, and as we go forward, we will implement it. But that's a 3-year journey as we go forward. But from a government perspective, we are not looking for any specific policy initiatives which may help the non-aero side of the business.
Understood, sir. Thank you and all the best. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have our next question from the line of Rushabh Sharedalal from Equirus PMS. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Am I audible?
Yes, you're audible, Rishabh.
Yeah. The first question will be on the DIAL airport. So, our presentation on page 13 mentions that the maximum capacity at DIAL which we can handle is 119 million. So that's like a 12 crore kind of a number annually. Now, if I do the rough math of it, considering that there'll be 130 to 140 people at the aircraft, on a particular aircraft, my number comes to roughly managing 9 lakh aircrafts per annum, which is roughly almost 100 aircrafts per hour. So considering the fact that we presently have 3 runways at the airport and the 4th runway is cutting the 3rd runway, so how will we be able to manage such a kind of number, given the fact that even the best airports in the world manage roughly 40 air traffic management per hour? So if you can just help me get a sense of those 119 million that we want to manage. That will be my first question.
So let me answer the first question. I think your facts are a little wrong. We have 4 parallel runways. One runway is slightly elongated, but it is fully operational. So from a efficiency perspective, it does not put any drawback on the ATM at the airport itself. So I don't think your maths will work out if you were to take into cognizance that there are 4 operational runways that will be available, and they can be switched with a cross taxiway. We'll be able to handle many more aircrafts, both from a takeoff and movement within the airport perspective.
Another thing is you have taken an average of 134 passengers, but in case of wide body aircrafts, which we are going to employ, we are going to allow more, they can carry up to 250 to 300 people average.
Yeah.
So number 1. Number 2, on our airside capacity, which we are now building up, can take 2,000 movements per day. That is the capacity we are building even today itself. So we are talking about 119 million, which is going to take after 7-8 years. By that time, a lot of technology will also change, and with the existing capacity available, we do not foresee any challenge.
Okay. So basically just wanted to understand that you said that, these larger aircrafts, so let's say if there are 100 aircraft that we are landing, how many of those 100 would be larger and how many of those would be normal aircrafts? If you can give just a rough ballpark number.
No, Rishabh, I would request you, why don't you come to Delhi? Okay? You come and meet with our technical team. and you see what is happening both on the technology side and what process improvements are happening other than the physical infrastructure that is coming up, that you'll be able to get a much better comfort.
On an average, about 20% wide body aircraft right now.
Okay.
Right now, but that is expected to go up because of international travel going up. See, Delhi is an international hub for India, and hence our focus is yes, it's wide-bodied for all international flights, most international flights, whereas narrow and cargo also, and narrow-bodied for the domestic or regional flights, if I may say so.
Right. Okay. Just a small question on. Hello.
From a maths perspective, you should assume about 30% of wide-bodied as we go forward, and the capacity being about 250 to 300 seats per aircraft.
The thing is, all the airlines are moving to 321, and which are the bigger aircraft, even domestic also, which can carry up to 220 people.
Okay. And just wanted to know your views on the upcoming Jewar airport. So how are we, because the phase 1 of the Jewar airport, they expect it to commence by 2024 with roughly managing 1.2 to 1.5 crore passengers, and going ahead it will be some 7-8 crore passengers. So how many passengers or air traffic do you feel that will shift from Dial to Jewar? Or if not, then how are we actually anticipating the capacities going ahead?
So if you were to assume the same maths that we're assuming for Jewar, then we can very easily handle not even 119 million passengers, but much, much more. But coming back to your specific question, yes, Jewar is going to go live sometime in 2024. 24 it will get complete, 25 it goes live. It really does not pose too much of competition for us, because the location of Jewar is a little distant from the economic centers of Delhi and Gurgaon. Delhi airport is actually a city airport now. It's right in the middle of Delhi and Gurgaon, which are the true economic engines of the national capital region. So we don't foresee much competition. The second aspect is, even as the airport starts operations and starts to grow, it will be primarily more low-cost airlines that would have a look at it, serving passengers from the western UP agricultural belt or industrial belt of Moradabad, Aligarh, and Agra. The highly paying passengers, if I may say so, will be all catered out of Delhi. Most of the international flights will get catered out of Delhi, because that's where the passengers prefer. So both from a geographical location attribute perspective and also the economic underlying economic activity perspective, Jewar has still a long way to go before it can pose any competition for Delhi airport. But yes, in 10 years, as the traffic is growing and air travel will continue to grow, Jewar will be a very successful airport at that particular point of time. So nothing to be worried about, at least in the medium term for us.
Right. And just a small question, if I can squeeze in. So, we have shared some amount of revenue with Airport Authority of India starting 1st April 22. So if you can just quantify the number that we have shared this quarter, and the sustainable number that we'll be sharing every quarter going ahead, some ballpark figure if you can.
The first quarter we have paid 400 crore rupees as revenue share to Airport Authority of India by Dial. So going forward, since first quarter we achieved about 15.3 million, so 60 million if you say, more or less we'll be sharing the same amount every quarter.
So that'll be 400 crores every quarter. Did I get the number correctly?
That's what we said, that 400 crores this quarter we paid, and we are expecting the traffic will be the same for the next 3 quarters. Yes, it is about 400 crores.
Sure, sir. I have a few more questions. I'll get back in the queue, okay? Yeah. Thanks a lot.
Thank you. We have our next question from the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you, sir, for the opportunity, and congratulations on a good set of numbers, as well as taking over Medan Airport. Sir, on Medan itself, so correct me if I'm wrong, so this will also add to FY24 full year revenues, apart from Goa and Hyderabad. Is that understanding correct?
Yeah, that is an equity method, because in Medan Airport we are holding 49% stake and the 51% is held by AP2. So they will be consolidating, will be accounting on equity method.
Okay. And sir, if you could give us some data on the FY22 performance of Medan Airport, maybe the EBITDA and the traffic which was there in FY22. Will it be possible?
We will share it offline with you. Amit will share it with you separately. I don't have it readily available here with me right now.
Okay. So moving on to the Goa airport, so you mentioned that there will be an interim arrangement because the petition which has been filed is starting from April 23. So what is the traffic assumption that you have made for this interim arrangement, and will the tariffs also be the same as you have mentioned in your petition?
No, as far as the tariffs are concerned, in case of the Goa, we have filed an application for a control period, April 23 to April 27, March 27. That is, but in the interim period of this 6 months to 5 months to 6 months, we have asked for ad hoc UDF, which the regulator in principle agreed, and they are examining it. We have filed necessary papers with them.
Okay. Sir, how do you see the traffic shifting from the existing airport to this airport? How do you see the growth for this new airport which is coming for Goa?
There is a good momentum, and the airlines are actually asking for the slots, but we are expecting the winter schedule will be starting by them. And as you know, there are 5 hours of the block period in case of the existing doubling. So we are expecting that this 5 hours will be the crucial for the airlines, and also then we are expecting good amount of the traffic. As of today, airlines are already requesting for the slots, which our team is already working on it.
And are we planning to monetize the land bank over there as well?
Yeah, the work is going on in that direction also.
Okay. Sir, so coming on to the revenue share in Delhi, so in the presentation, an amount of 817 crores is mentioned. So you just mentioned that the revenue share was 400 crore for Q1. So what does this 817 crore comprise of?
400 crores only they are paid in first quarter.
Sir, in the presentation, so if I look at the slide number 35, revenue. That was a mistake on my end. So this is 400 crores. Okay. So, sir, then a final question on Cebu Airport. So, sir, the profit over there, in fact, the loss over there has been consistent despite the growth in traffic and revenues. So, when do you see this turning around?
So, in the first quarter of this calendar year, because Cebu follows the calendar year, was a bit low the traffic, but April onwards it started improving a lot. And this second quarter, June quarter, they will be much better placed. And we are expecting Cebu this financial year, they should be able to do more than 60 COVID level traffic.
Okay. So probably by next financial year, we may see some profits over there. Will that assumption be?
We cannot comment, but at least it will be able to meet all its obligations.
Okay. So one final question. There was supposed to be a testing of the earnouts of 1,060 crores by FY22 end. So could you tell us about whether that has happened and where do we stand?
So the earnouts will be, they were supposed to be tested after the audited accounts. Now that the audited accounts are over with, we are in conversation with ADP, and it will be settled over the next few months itself. So that's not an issue at all.
Okay. Thank you, sir. Thank you so much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have our next question from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Yes, good afternoon, everyone, and thanks for the opportunity. The first question that I had was on the capacity front. Now, you did mention 119 million as Delhi capacity. I wanted to get a sense that is this today constrained more by the airside capacity, and can this number become larger over there?
Yes, as of today, it was constrained by the airside. Now we are building up the capacity on the airside, which will take care of up to more than 119 million.
Okay. Can the numbers be meaningfully different than 119 over time? Just getting a sense from you, because I think this is, for an asset like Delhi, an extremely important parameter for us to monitor.
No, but 109 is the capacity we are building. But you can always sweat it, because today the technology and going forward the technology is going to change, and the aircraft mix can change, and anything. So because of that 109 million, basically we have estimated basing on 2,200 movements per day. Those are the highest movements. So there should not be any challenge as far as the handling of 119 million.
And with the sweat, actually, it can go up to about 140 odd million. That is normally that we have seen in our airports. We've experienced that in Delhi also. We've experienced that in Hyderabad also. So we take into account all that as we go forward. But yes, physical rated capacity will be 120 with the potential to go up to about 140.
Sure. That's helpful. The second question that I have was this notion that obviously Delhi will become an international airport hub at some point of time. You did allude to, let's say, a 400 keys hotel coming about at the terminal. As you see through this transition, which are the other things that you need to do for Delhi to start becoming attractive as a hub over time?
Well, I think the best is that if we can offer wide-body direct flights to North America and to also Australasia, if I may say so, so Australia and the Far East. These are two aspects which will catapult Delhi into a hub similar to a, let's say, hub in Dubai. What does Dubai offer? It offers direct flights all across the world. It has a great duty-free and shopping environment at the airport. That's all. I mean, for a transiting passenger, he requires these two aspects very well, right? And Emirates, which is the main airline servicing Dubai, is able to cater to these transiting passengers globally. So if we have Air India now, which is now in the private hands, catering to similar fashion, and Air India has its home in Delhi, and along with that, in the low cost category, if I may put, Indigo, as it starts to grow and spread its wings. Delhi has all the attributes to become a global hub over here. So yes, airlines have to play their role for Delhi to become a global hub. The government policy is very much there now, incentivizing airlines to use Delhi as a hub. So previous policies were more inclined to encourage hub flying from Middle East. That has all now gone. New technology has helped airlines now to shift to direct flights from Delhi. So the 777ERs or the 787 aircrafts are now flying all over. So all the attributes are there. and it is always a partnership between the airline and the airport. We are fully supportive of the airlines, and with the Air India now being in private hands, I hope they have the same global aspirations with which that airline started many years back, right? So that is where we are also banking upon them, and also on Indigo. We're quite well positioned from that perspective. As the Indian diaspora grows, as tourist traffic within India grows, Delhi will be a main hub that will be servicing both Asia, Europe, and North America.
To add on to that, basically because of the COVID, people are more preferring to have a direct flights rather than via flights. So that will also enhance the connectivity of the Delhi, the far distance places, especially in the US. Now we are connecting more than 80 destinations. So, and Canada. So that will improve further, reduce the dependence on the Middle East carriers and Middle East, and the direct connectivity will improve.
Understood. And just to gel well both my questions together, because capacity is also important. In the scenario that Delhi starts becoming more like a hub, the way you put it, is 30% a good number of wide bodies because it kind of defines the capacity, or have you seen instances of airports having a larger proportion also as they become a hub?
No, the number will surely go up. Okay, honestly speaking, and this also answers an earlier question by another analyst. I think Mohit asked that question: is how do we compare ourselves with JWER? Delhi Airport is going to be an airport which targets the creamy passengers, international flyers versus the low-cost flying within domestic. So 30% is just a number out of the hat. Our focus is how we can continuously increase that number, because that's where the cream lies, right?
Absolutely.
And that brings in shopping in our airports. That gives us much better per passenger fees. So airlines are also happy because they are far more efficient, and the hub and spoke model that will service the domestic side of it also gets serviced. So it's a composite strategy. Don't limit yourself with that 30%. That was just an anecdotal benchmark given because the earlier comment was that we are only 20%, right? So will we grow to meet that capacity? We are gearing up to grow that capacity.
So I compliment what Saurabh has said. If you look at back about 4-5 years back, we used to have a lot of ATRs. Mm-hmm. And still the moment, see, ATMs means whether it's an ATR, whether it's a jet, whether it's a bigger aircraft, time is one and the same. Now almost ATRs are moved out. Only wide body and narrow body have come. And over a period of time, narrow bodies also will come down and we'll have more and more wide bodies.
See, narrow bodies are far more efficient, and I think maybe the airline analysts can give you a better answer over there. They're far more efficient if the flight is between 5 to 6 hours. 6 hours, after which it becomes fuel inefficient. So you need to have wider bodied aircrafts which can fly longer distances for airlines to make money, and that's our focus. That's going to be our focus.
Great. Noted. Thanks for providing as much color. The third question is more micro from my side. See, if I see the debt numbers of Delhi and Hyderabad inside your overall debt, it seems as if your standalone debt numbers are basically going up quarter after quarter. And situation today is such that you have not capitalized on the capex that you are doing. At some point of time, interest costs start going up. So it will be useful if you can give us some sense that, let's say by FY24, when you start kind of paying the interest costs as well, assuming no moratorium, how are you kind of thinking of funding this thing up? Because today already your standalone debt are going up because interest costs keeps on piling up.
The issue is, as far as the dial is concerned, that the debt has not gone up except 1,000 crores which you have added this quarter, and the total project cost of 11,500 crores approved by the board. And this amount is part of that, and after that with the lease financing, we don't require any further debt. Yes, you are correct, but over a period of time, once the 24, the entire capitalization is completed, the entire the interest will carry to the P&L account. But at the same time, our tariffs will also go up, and the traffic also estimated to be 75 to 80 million. So that will take care of the entire debt servicing, and further monetization of the land and the rising of the RSDs will help us out in in repayment of the debt also over a period of time.
So see, maybe this is not the right forum, and we can discuss this later on also. But the fact that you're suggesting that on land you probably want to kind of not lease out, but actually construct, it just makes the dependence on internal accruals and thus traffic growth and non-aero revenues a lot more to kind of service our commitment. So maybe later on, if one can kind of discuss the funding part over a 2-3 year perspective, and whether one really needs to get external support or not, would be useful for investors to kind of assess the company.
So
I guess it's a timing call, but yes.
Yeah, exactly. It's a timing call. In our modeling, the operations both at Delhi and Hyderabad are very much supported. Hyderabad, of course, because it has a very low revenue share. But Delhi also, and again, it's all a question of what you are assuming, how much the non-aero will emerge, what is your assumption on the traffic. Absolutely, those can be discussed with us offline. But the optionality for creating more internal accruals through monetization, we prefer to monetize now assets than just to monetize land. And that's the focus with which we are now moving forward, and hence that's why we talked about self-development. So there are number of build-to-suit opportunities where we will build for third parties for their particular requirements, and then we can monetize that building into an InvIT or a REIT, whatever makes sense, or to any sovereign or a pension fund, similar to what Bharti has done very recently with Brookfield. So that's a strategic call as to how we should be doing. We don't want to leave substantial amount of development profits in the hands of a real estate developer, and we are just a landowner over there. We rather create value on that land. It is our land, and how much does it take to create your own building? It's not a very complicated business. So it's a timing issue, nothing else other than that.
Great. I'll just kind of end it off with this final question. It kind of summarizes most things that you said. Do you think that you will have to choose one of these two things, whether you monetize your land as part of your existing concession, or you add more outputs over time? Would there be a choice that you would have to make, or do you think you can do both without external funding?
No. So adding airports is a very different strategy. And if you look at
funding perspective, that's common, right? You put in money either there or there.
Yeah. So even in the funding side of it, if we look at it, and clarity will emerge over the next 6 months, which I can't really highlight at this particular stage. But our strategy over there is mostly in the brownfield airports, and hence the equity requirement in those airports will be very minimal. We are not very, very aggressive on greenfield developments, but mostly on the brownfield side, and hence bringing in operational efficiency and capital efficiency in an airport, that is our forte, and that's where we will be operating on. So whether it is Nagpur or going forward in or Medan right now in Indonesia, and there will be many more opportunities that the teams are working on. Those are mostly brownfield in nature, and hence the equity requirement is going to be minimal, which can be actually funded through internal accruals itself from a group level perspective.
Got that. Thanks a lot for the time and your perspectives. Those are my questions.
Thank you.
Thank you.
We have a next question from the line of Ranjit Sivaram from Mahindra Manulife Mutual Fund. Please go ahead.
Yeah. Hi, sir. Just a clarification. I think in the last call, you had mentioned there are certain the revenue share which were not paid during that COVID time, and I think we had approached a tribunal or the court to get some that concession for that along with the other players also. So any update on that? Has that been passed or it's still yet to be finalized?
I think we have already clarified on the call. I think you have just joined a little late. As far as the 2021-22, the amount which has not been paid is about 13 billion INR. And 22, 1st April onwards, we have already started paying the annual fee, monthly annual fee. First quarter, we have already paid 400 crore rupees. The matter now which is pending before the tribunal, all the necessary documentation has already been done, and cross-examination expected in the month of October. After that, the final arguments, and expected to have the final verdict by December or January of this year.
Okay, sir. Thanks.
Thank you. We have our next question from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. So, what will be our steady state revenue from lease rentals at Delhi Airport once this second tranche of land is also leased out? Annually, means can you give any ballpark figure, sir?
Yeah, once we come 2.78, they have already taken another 2.121 they pay. The total lease rentals the company DIAL will receive is existing hospitality districts about 130, and the new one is 360, total about 500 crore rupees.
Annually?
Annually.
Annually.
We will about the new hotels or new monetization without considering that.
And this revenue is also subject to that 44% revenue share to Airport Authority?
Yes, as per the existing concession agreement as of today, entire revenue earned by the DIAL, we pay 45.99%. Only in case of the tariff determination, this revenue cross-subsidy will not be done. On CPT revenue, there will not be any cross-subsidy.
Okay. And secondly, once Goa Airport becomes operational, so what is your assumptions? What kind of revenues we can generate annually once it stabilizes the operation?
This is basically forward-looking, but if you look at it, because it all depends upon the tariff determination of aeronautical revenue and non-aeronautical revenue. So when you go into the full capacity of 7.5 million, we can touch about 800 to 1,000 crore rupees revenue.
Okay, sir. Thank you and all the best.
Thank you. We have a next question from the line of Rushabh Shardalal from Equirus PMS. Please go ahead.
Yeah, thanks for the opportunity again. Just two small bookkeeping questions from my end. So, one regarding the airport land monetization, you already said that 2.78 million has been taken over by Bharti, and 2.12 we expect to do it by March 23, and the payment to be received by March 24. Any expected amount? What sort of an expected amount do you expect to receive from this transaction?
On 2.12 million, we will get another 600 to 800 crore rupees with regard to ADC and RSD together.
Okay. And one question on the DIAL and the Hyderabad airport. So our revenues are 8.9 billion and 2.7 respectively, with EBITDA in DIAL being 2.9 billion and Hyderabad being 2.1 billion, right? Just wanted a breakup of this 2.9 and 2.1 billion in aero and non-aero or aero for DIAL and Hyderabad.
In case of the DIAL, the aero revenue is 219 crores. In case of the Hyderabad, aero revenue is is about 178 crores.
No, actually, I wanted the EBITDA breakup of aero and non-aero.
We do not do aero, non-aero EBITDA. It is a simple P&L account where we have a revenues of aero, non-aero, other income, and other expenditure, total expenditure, then EBITDA is drawn.
Okay.
There is no separate preparation of EBITDA for each line.
Okay. And yeah, that's all from my side. Thanks a lot.
Thank you. We have our next question from the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you, sir, once again for the opportunity. So just wanted to know what will be the equity requirement for FY23 and 24. And I suppose this will be mainly for Crete, Medan, and Bhogapuram projects. So if you could just tell us the details for FY23 and 24.
The equity requirement in case of Crete, there is nothing because Crete investment has already been done last year itself. Medan equity has already been completed in the month of April itself. And Bhogapuram, we are not expecting much. It is only 30 to 40 crore rupees this year.
So what was the amount for Medan that we have already done?
Medan, we have already infused $13 million, is about 110 crore rupees.
Okay. Sir, one final question, sir. So, see a significant jump on the non-aero revenues, both for Delhi and Hyderabad. So, could you please tell us what will be the current spend per pax, especially in the light of international passengers traffic also coming in from March onwards? So, what will be the current level of spend per pax at both airports?
We can provide offline data. It is in the presentation you can see.
Slide number 18, it's there.
Okay. Thank you, sir. Thank you so much.
Thank you. I now hand over the call to Mr. Saurabh Chawla for closing comments. Over to you, sir.
Yeah, thank you, ladies and gentlemen, for joining our Q1 call. The IR team is available for any further queries that you may have. You can take that offline. You can send us an email or enter into a call with them. Thank you so much. Have a good weekend. Bye-bye.
Thank you. On behalf of GMR Infrastructure Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.